So in this video, we're going to go over the Macd divergence. And with the Macd is one of the most fluid and most versatile trading indicators that you can find. And it's an indicator that's actually a leading indicator. And I'm going to have another video that explains leading indicators. But the Macd, basically what that means is the Macd gives you a precursor to what price is going to do instead of telling you what price is already done. So let's get right into it. In this video, you're going to learn, what is Macd divergence, how to find it on the chart and the best way to trade it. Because the Macd is something that I trade every day. And when it comes to it, I used to actually not like the Macd, but when I actually understood what it could possibly do and understood how to use it, it became my favorite indicator. So let's get right into it. So to find the Macd, this is tradingview.com. And what you're going to do is you're going to go to indicators and strategies. And I like to look for the Macd 4C. Now, when you type in the Macd in TradingView, you're going to see this one right here. This one is good to use. I'm actually pull up both of them so you can see the difference. This one's good to use. That's the generic one that you'll see everywhere else. But on TradingView, they actually have another one called the Macd 4C. So if you go down a little bit, you see it. And the reason I like it is because it gives you more cleanliness, especially when it comes to divergence, because that's what I'm mostly looking for. And the Macd is the divergence of it. But whichever one you feel like using, use. But for me, I like using this version of the Macd. So the way to check it out, the way to actually find, your divergence, let's see if we can find, there's two types of divergence on the Macd. So there's the one type of divergence where it's price to indicator divergence. So there's two types of it. The first one is the generic one where if price is going up, like as far as momentum divergence, price is going up, and you see right here, divergence is going down. Let's move that out the way. The divergence indicator is going down at the same time. That's a form of divergence. That's usually predicting that a reversal is happening in the market. So when I like when I see that, and even if you take it even further out, you take it from there to there, this is going up. Well, if you take that same line, and if you want to make it really accurate, you can go right here, make a vertical line, and then mark it down from here. So you see that price is going up, but the Macd is continually going down. So that's letting you know that the momentum is starting to weaken, because basically the Macd stands for moving average convergence divergence. So meaning when price and momentum is converging, price is usually going to continue in that same direction. But when price and momentum is diverging, then that means a reversal could happen. So that's one way to look at it. So let me show you what the second type of divergence would be. So right here would be the second type of moving average convergence divergence. So you see here right here, where it's red, this little red blip right here. What I'm going to do is I'm going to put a vertical line at that spot so you can see it with price. So you see that the red is right there. Now, the way I like to look at it is I use moving average to trade with the trend. So the way I look at it is I see the reds here. I'm waiting for, since this looks like it's an uptrend, I'm waiting for the green to go back red so I can find an entry to continue buying. So you see here where the green turned into red, but you notice if you look, was price higher here when it went red, or was it higher here? It was higher there. But if you look, the Macd, they went lower. The Macd is lower than what it was over here. So if you mark it up like this, you can see that there's divergence in the MACD in this way. So you have this type of MACD divergence, and you have this type of MACD divergence. There's two types of MACD divergences. So when you look at it like that, this MACD divergence is more so, if you look at it like this, is the way to continue a trend or to find a trend. This type of MACD divergence is the way where you're anticipating a reversal in the market. So you're anticipating a reversal here with that type of MACD divergence. So the best way that I trade it, or the secret to trading it, and you probably won't find this very many places, is I literally just kind of ride out the MACD and find my entry. So what do I mean by that? So this is an uptrend. So when it's an uptrend, I'm looking for a red area to find my next buy. So let's look at here. Vertical line, this is the last time it was red. So what I'm waiting on is, say I missed this trade and I'm in this area of the market, like say it's this day. I'm waiting for the MACD and price to make its next wave. So price went up, it starts to correct and pull back. And on that pullback is where I buy. And as soon as it starts to go back up a little bit, that's where my buy is. And then I'm just repeating the same process. I'm waiting for the MACD to go back red. I'm waiting for a correction to happen in the market that's with that MACD turning back red. And that would be my next buy. So this is the way that I trade the MACD. If I'm looking for a reversal, what I like to do there is find a point in the market where there might be a price zone. One way you can look for price zones is you can use Fibonacci extensions. So that would be your Fibonacci extension. So, you would have a price zone here. You would have a price zone here. And you're waiting to see if the price is going to get close to that area. So you're waiting to see if price is getting close to that area. And then as it's getting close, you're watching the MACD for the convergence that you want to see. So you want to see price like in an uptrend waiting on a reversal. You want to see price going up, and you want to see the divergence going down, the MACD going down. And when you see that combination, then you know that it's possibly about to be a reversal. So I'm hesitating on buying in this area. When I see this, I may not buy anymore. Even though it's an uptrend, I'm waiting for a sell to be confirmed. So these are the two ways that I use the MACD that very few people have actually found. And this is a way where you can use the MACD in a professional way to where you actually be able to profit and be accurate in trading. So if you found value in this video, definitely like, subscribe, and share this video for other people who are trying to figure out how to trade. And I'll see you in the next one.